It's Clay Trader, and this will be a video chart on ticker symbol CIE. We'll take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like a few weeks worth of time, it's actually just the past 2 days broken down into 30-minute time slices. I let you this time frame. I think does a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. I did do this analysis, so that's where the green line is coming from on the chart, and that kind of represents a good segue into now getting the chart updated for today. Now, I'm not going to beat the dead horse of why 28 cents is so important. If you're curious on that, you can just go back and watch the video from the 15th. But if you want to accept my word for it, from a quote-unquote story perspective, 28 cents, very, very important. In a nutshell, any sort of closes below there, or if the price goes to the downside, that's putting the price back inside of this range where the price already was. And that's not a sign of true strength, right? Price movements make progress. They don't go back to where they were. So 28 cents, yeah, it pulled back, but to give credit where credit's due, not only did the price hold above 28 cents, but also held up above the purple line right there, which is the 50-period simple moving average. You can see it was kind of like a double whammy right there of supports, and the price definitely respected that. Now, does that mean that this is guaranteed to go up to 45 cents tomorrow? I'm not saying that. I'm just saying that good to see that, that area where from a technical perspective, you would want to see it act as support. It did indeed act as support. As far as levels of resistance are concerned, nothing here has changed from yesterday's video. Still all about the pink line up there, which is that famous 200-period simple moving average. Even if you have just a surface deep understanding of charts, I'm sure you've heard of the 200-period, and you know that when the prices blow it, it does tend to act as resistance, which has already happened right there. This is probably a stretch to say it got rejected there. Somewhat within the vicinity, but I'll admit, yeah, probably stretching that a little bit. But point here being, going forward, if any sort of longer-term upwards price movement is going to occur, the bulls are eventually going to have to confront this pink line and not only push above it, but then be able to stay up above it. But big picture perspective, bulls still have an opportunity to build that higher base, and that's what it's all about from the longer-term perspective. Higher bases lead to the construction of long-term uptrends, and assuming you're bullish, that's what you want to see, and that's all that is still totally in play as long as 28 cents continues to hold. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.